First up this morning, we have Northern Star Resources and Simon Jessop, Chief Operating Officer. Simon is a mining executive with more than 30 years' experience in underground and open pit operations throughout Australia, a graduate of the WA School of Mines here in Cal with degrees in mining engineering and surveying. Simon has held senior management roles at Saracen Mineral Holdings, Evolution Mining, Panoramic Resources and Burncut. Simon has held the position of Northern Star's COO since February 2021 following the merger with Saracen. Please welcome Simon to the stage.
Thank you, Duncan and Canaccord, and for the introduction and the opportunity to present here again at Diggers and Dealers. I want to start by highlighting a milestone that one of our operations has just passed in the last week or so, which is 30 years of continuous mining at Kanowna Belle. Now, over that journey, Kanowna Belle has mined 42 million tonnes of ore out of that mine and 6 million ounces. And then you couple that with the open pit, it has actually produced 7.2 million ounces of gold. Now, when they started Kanowna Belle back in 1995, the gold price was an Australian dollar price of $550 per ounce. Fast forward 30 years to today, and it's over $5,100 an ounce. Who would have ever dreamed that when they started that mine, the gold price would be that high, over 9 times that initial price when the operation kicked off? And Kanowna Belle still producing net mine cash flow, still has a life in front of itself, and is a credit to the people who've worked there. Now, life at Northern Star is a really important ingredient and something that we think about across all of our operations. Today, I want to touch on the Northern Star business and the size and scale of the business you'll see throughout the presentation, but also the financial strength of this business. There's a disclaimer. Please feel free to read that on the website or at your leisure. So it's fair to say in FY25, Northern Star had a tough year or a challenging year on production and costs. And this is primarily due to KCGM. But we see that purely as just timing and nothing else. Our 3 production centres, comprised of the Kalgoorlie Production Centre, the Yandal Production Centre, and our Pogo mine in Alaska, produced 1.63 million ounces of gold, and did this at an all-in sustaining cost of $2,163 per ounce. It is still a credit to the size and scale of this business, but going forward, we are building significant capital projects that will reduce our cost base in time to come. Now, it's easy to say 70 million ounces, and at Northern Star, that's what we've grown our resources out to. And our reserves are an impressive 22 million ounces. And these, for the Australian assets, are done at a gold price that is only 44% of the current gold price. So having a significant resource and reserve base that also is a quality resource base is absolutely critical and the foundation of a gold business. Now, 70 million rolls off the tongue fairly quickly, but when you compare that to 10, that is more ounces in resource and reserves than we have for 10 WA listed gold producers. We've certainly been busy over the last 4 years. In FY22, we delivered no less than 39 trucks into KCGM as a major fleet delivery, plus a whole heap of other stuff. The Thunderbox process plant kicked off, and that is to grow from 3 million tonnes per annum to 6 million tonnes per annum. So in FY23, we started commissioning the Thunderbox process plant, and Pogo continued its journey in terms of optimising that particular mine. In KCGM really kicked off the underground growth in FY24, and we saw quarterly run rates well in excess of the POGO goal of 300,000 ounces per annum. In FY25, we completed the KCGM East Wall remediation, and that is now behind us. We also saw POGO achieve its financial payback. So what does all this translate to? It translates to a net mine cash flow over those 4 years of $3.2 billion. And in the last 12 months, as some of our capital projects have wound off and kicking into gear, we saw a step change of another $500 million year on year. Now, I'd also like to highlight Kalgoorlie Operations and Carosue Dam. They typically go under the radar for us as a business, but in the last year generated $650 million of net mine cash flow. Over the last 4 years, we have also produced or given back to shareholders $1.4 billion in dividends. And this equates to, over the journey since 2012, $2.4 billion coming back to shareholders in capital management. A fantastic number. Now, the story of KCGM, really since 2018, has all been about the wall slip and the open pit. I can tell you in the last 12 months, we have mined 74 million tonnes out of the open pit. We have developed 28 kilometres of drives in the underground, and we've milled over 12 million tonnes of ore. The new story for KCGM should be about delivering growth and unlocking KCGM's full potential as a world-class asset. Having the KCGM operation, you have to be the most visible mining project in Australia. Each year we have over 200,000 people go to the Super Pit lookout and look across this vast operation. And it is impressive to see, and it's something that we're very proud of. Mining the East Wall that occurred in May 2018 has been a challenge. It has taken slightly longer than we anticipated. But when you look at rocks put together from the failure of 30 to 40,000 tonnes, all covered in rill, we had to safely mine and execute our way through that. But what I'm most proud about is that over 55 months of mining, 34 million tonnes, the East Wall is now complete. I would like to highlight a few people who worked very diligently on this project over the last 4 years. Coast Kirsten, Justin Foster, Sean Davies and Hemindra should be very proud of the result of this project. And going forward, we have now seen a step change in productivities at the open pit. Now we're getting back to business as usual instead of dealing with this East Wall. This slide is simply outstanding and is why KCGM is absolutely valued so highly in our portfolio. Over the 6 years, you've seen the resources grow from 19 million ounces to 38 million ounces over those 6 years. That's a 104% increase on the resource base. And our ore reserves have also grown to 14 million ounces, or a 48% increase. They are huge numbers. All of this has come at a discovery cost of only $12 an ounce. So, and you can see in the last couple of years, it has been $8 and $6 an ounce. Now, the interesting part of the 38 million ounces at KCGM is that 15 million of those ounces is in underground, and we only have 3 million ounces in reserve. We firmly believe with time, drilling and effort, the underground resources and reserves at KCGM will overtake the open pit at this asset. So despite a tough year at KCGM, we still sold 419,000 ounces of gold. And now we're guiding for FY26, 550 to 600,000 ounces of gold. And that's because we're now in the Golden Pike North, the high-grade portion of the open pit. And I'd like to remind people that this is all pre the KCGM mill expansion, which will be kicking in less than a year from now. And the nameplate, once that mill hits nameplate, it will be going up to 850 to 900,000 ounces per year. You can also see the potential Hemi 10-year production profile at 530,000 ounces per year. So our short-term focus at KCGM really is around executing our operating plans. It sounds simple, and it is, but we've had a major distraction of the east wall for the last 4 years. So it's getting back to that business as usual, efficient mining at KCGM. We're looking forward to commencing the new tails storage facility, which will take all the tails from the expanded process plant. And in the underground, from FY20, we only developed 4.5 kilometres. Last year, we developed 28 kilometres. And in the year ahead, we will develop 36 to 40 kilometres at KCGM by itself. Our contractor of choice for KCGM is without a doubt Northern Star Mining Services. They are executing this ramp up as fast as anyone could and putting in significant infrastructure to set this up for multiple decades. In the last 12 months, they've cut 7 portals at KCGM and have 585 people working at the site and 10 jumbos running around. And lastly, because we've got a bit of capacity back, we are really focused on extracting quality ore from the open pit, which has over 600 loads. So now we've got some time and capacity. We're very focused on improving the quality of ore that we send to the mill. This project is simply massive. We are building a mill expansion to go from 12 to 13 million tonnes to 27 million tonnes per annum. We're in the 3rd year of a build, so we're in the last year of this build, which is very, very exciting because we're seeing it all going up and it's getting down to the pointy end of this project. It absolutely remains on time, on budget, and on track. And I'm really looking forward to the cash flows that's going to come out of this mill from the 2.9 million ounces we have on stockpile. We've poured over 24,000 cubes of concrete up to date. 85% of it's done. There's over 5,400 tonnes of steel in this project, and over half of that is complete. So the project's going exceptionally well. So I want to move on to the Yandal production hub now, which comprises of Thunderbox and Jundee. So our focus at Jundee and Thunderbox really is around cost reduction and ensuring we are not mining just higher and higher cost ounces going forward. What I'm really impressed about is both process plants at these operations are at nameplate and or above. It's now around stabilising the costs at both of those processing plants. And Jundee is the usual busy mine. It does 30 kilometres of development. We drill over 460 kilometres of diamond drill holes every year, and this operation produced a net mine cash flow of $430 million in the last 12 months. Going forward, we're guiding Yandal as a production centre to be between 500 and 550,000 ounces per annum, and we see this as the sweet spot between ounces, costs, and cash flow generation. So Pogo has had one system and one strategy for quite some time, and that has been renovate the mine, optimise the mine, and grow it out to 300,000 ounces. Pogo has had an outstanding FY25. In Q4, they delivered 85,000 ounces and 283,000 ounces gold sold over the year at a US dollar gold price of $1,341 an ounce. It's coming. Okay, so Pogo is positioned absolutely for strong results. You can see the net mine cash flow generation at this asset has gone from 52 million a few years ago to 297 million in the last 12 months. Now, I'd just like to remind everyone, Pogo was purchased for US 260 million in 2018. So in the last 12 months, the net mine cash flow has been bigger than the original purchase price. The optimisation phase is ongoing in the mine. The annualised run rate in the process plant is going exceptionally well above nameplate, and Pogo is now a consistent and reliable production centre. Okay. While we're still busy at Pogo, in the last couple of months, Northern Star Mining Services and Northern Star have cut 2 portals. And these 2 portals are to access the central veins and the Goodpaster deposits. Those 2 deposits by themselves have 1.5 million ounces at 10 grams per tonne. So we're excited to get underground off these new platforms, start the infill drilling, and really see the next generation what we can do at Pogo. It will give us future mining optionality as well as grade optionality for this asset. And we still come back to Pogo has 6.2 million ounces. So we are now considering what are the expansion potential projects we could do with this asset. Not just ounces, but also cash flow. Struggling a bit. Okay, on to Hemi. This is our newest growth engine. We have only had Hemi for 3 months, and I really am happy to have new shareholders join the register. The advantage we see for new shareholders is that you are joining a net positive cash flow business that pays dividends and also brings significant operational skills and expertise on project delivery into this acquisition. It is absolutely on point and to strategy. So just to remind people where Hemi is, it is 85 kilometres from Port Hedland. It's in a Tier 1 jurisdiction. There is over 11 million ounces as the last published resource from De Grey, and it has significant mine life, and it will be a low-cost operation. It has a lot of geological upside that we see between some of the resources from an underground perspective have over 23,000 ounces per vertical metre. And in terms of stakeholder engagement, we continue to engage with all stakeholders and are working towards a positive delivery outcome and a win-win for all parties. So Hemi at the moment is waiting on project approvals as we anticipated. But while those project approvals are happening, we are optimising the mine designs, the processing plant, and going through every particular element that we can for this project. A lot of good work has been done. However, we are looking at this through the lens of an operating business and bringing those skills and expertise to it. So we do see plenty of optimisation to happen. When we get the project approved, we will update the pricing, and we will take this through to final investment decision to the Northern Star board. In an ideal world, we would see the capital at KCGM mill expansion roll off. We would then see a step change positive lift for cash flow generation at KCGM. And then we can transfer the skills who are match fit after building the KCGM mill expansion onto this project, as well as the Northern Star operating model. So in summary, Northern Star is still very, very busy and we are growing, but we are growing profitable ounces across the portfolio. Our major projects such as a $1.5 billion mill expansion, our open pit stripping and our underground development is all around targeting cost reductions in the future. Having 70 million ounces in resource, 22 million ounces on reserve, we have plenty of portfolio value to unlock and optionality. And we are transitioning as that capital comes off from massive projects like the KCGM one into a step change in terms of cash flow generation. Hemi is absolutely the next leg of the journey for Northern Star, and I'd like to thank you for your time today.
Thanks, Simon. Any questions from the floor? I just have one quick one, Simon. You mentioned KCGM expansion on time, on budget. Just remind us again on timing, roughly, for completion and commissioning.
Yeah, sure. So the process plant is planned to come up at the start of FY27. So 11 months from now, we'll be turning this on, and the first stage is 23 million tonnes, then 25 million tonnes, and then nameplate at 27 million tonnes. So we've been very realistic on the ramp-up profile of this mill.
Terrific. Thanks again, Simon.
Thanks.